FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 5/14/19, almost halfway through this month. Exciting month it has been. You know, there's never a dull moment when Trump is president, that's for sure, whether it's stirring up the so-called allies or stirring up the so-called enemies or just sticking his nose wherever. There's always controversy when President Donald J. Trump is involved. Well, the latest imbroglio we'll get to in a moment. But as always, if you got something to say, you want to be heard, you want to be a part of the show, email us, kl@kerrylutz.com. So we had imposition, raising of tariffs from 10 to 25% on $200 billion worth of goods, with the threat that everything that China exports to the United States is on the table. And what is that going to mean to the market? What does it mean to the economy? Is it good or is it bad for America? Well, our good friend John Argrace is with us now. And John, it's great to have you back on. So what does this mean for the American people? Is this a good thing or a bad thing?
Well, I guess it depends on which way you see it, but I think we can at least learn from the past, Kerry, because we've only been here once, right? So it's not like we can say 9 out of 10 times. This is the first time, certainly in our lifetime, that we've seen a tariff war. And the only example I'm aware of is the one that was first done back in 1930. And that, of course, was called the Smoot-Hawley Act, where we imposed 40% tariffs on 20,000 incoming goods to, sound familiar, protect the American farmers. Seemed like a good idea at the time, but there are those who believe very fervently that that was the catalyst, imposing those tariffs out of nowhere, that caused the U.S. to move from a position of being in a bad recession into the Great Depression. So I think it's fair to say we're certainly on untethered times. We have no idea how this is going to turn out, but might not be any different than when, as kids, we used to play with fireworks on the 4th of July, and everybody would enjoy the fireworks. And then you'd hear about somebody's house that just burned to the ground at 3 o'clock in the morning. Unintended consequences happen. So I'm afraid that if we keep teeing up these trade war talks and putting these tariffs into place, ultimately it's going to affect, now it may take weeks or months for the cards to show up on the table, but ultimately it's going to affect the consumer. They're going to stop buying because prices are going too high. It's going to affect the workers, right? We've got low unemployment. If you can't sell anything, then there's no reason to have a worker to put it all together or package it up. And ultimately, it's going to affect the stock market. And I think that's what's happening right now. The investors are, on Friday, we're looking at green shoots. On Monday, we're looking at not just listening to the news, but buying the rumor. We're looking at the news on Monday that this could get ugly. And is it even possible that China could effectively just say, we're done here. We walk away. We don't imagine that could happen, but it could happen.
Yeah, and so they export $600 billion a year to us and import $100 billion. So that's an imbalance in a trading relationship that cannot go on indefinitely here, John. So something obviously has to be done with it. We won't even get into the nagging issues of forced technology transfers and
right.
And intellectual property theft, but those are real. So if we don't stand up to them now and we wait 10 years, eventually the showdown was going to happen. All right. There are gross inequities in the trading relationship. And I'm not about to say that the U.S. is blameless and that it doesn't bully its trading partners in other parts of the world. It certainly has. That's why we had this thing called gunboat diplomacy, where if a country in South America was going to default on their debt, they'd send the gunships in there just on a friendship tour to show them that maybe it wasn't such a good idea to default on their debt. But nonetheless, we're in a different world. And there is no question that the Chinese aggressive trade stance has damaged the American economy. I will say that, hey, consumers have done well, but you got to balance that. And let's not forget that for the first 170 or so, 130 years, country's existence, it didn't have an income tax. It survived on tariffs and excise tax on alcohol. So unintended consequences kind of run both ways here, don't they?
Always, and always in the timing, right?
Yes.
What was a hit song is a dud 2 minutes later, 2 years later, right?
Yeah.
Just doesn't play anymore. And I'm not sure that there is what's the correct course. I don't know that there is a correct course, but I do believe that it makes sense for our leaders to be encouraged, particularly when these two leaders, the countries represent, was it 40% of the world's output in manufactured goods? That's pretty strong. It would be good to the extent that we can have our leaders believe that they're being, respected and heard, because, they see things vastly different than we do. And I can't tell you that one way's right, one's right way is wrong. Of course, we like to say it's unfair, but let's also, to your point, the U.S. of A. is a whopping 5% of the world's population, and everything's traded in U.S. dollars, particularly oil, which is a major denominator. So we've got a very small slice of the world pie, and yet we're dominating in so many ways. And let's just understand, when you're number one, whether it's your team, co-warriors, right? No matter what team you're rooting for, when you're number one, you immediately place a target on your back or lower, and now everybody wants to kill you, crush you, make you disappear. So it would be a wonderful thing if our world economies, particularly the leaders in growth and whatnot and output, could actually work together so we can pass the ball back and forth as we both want to score, as opposed to say, well, we're stronger than you are, not recognizing that we're all in the same food chain.
Yeah, we certainly are. And, China has always waved this shiny object in front of American business: lower costs, big markets, huge markets, domestic markets in China. And yet, to a large extent, hasn't really materialized these export markets, or they forced the companies to actually build the factories in China. So they really don't help the U.S. domestic economy. And it's market distorting, a lot of other things. Look, my point is, I don't know how it's going to work out, but if it didn't happen now, it was destined to happen. And the U.S., the longer it put off this ultimate confrontation, the weaker it would become.
That could be. It's hard to see the future, right? I just wonder if there was another approach. Let's also understand that if you are running a country and you are in your position for your lifetime, and I may be up for re-election in a couple of years, trying to go for another 4 years. It's an interesting time to poke the bear, particularly when you are the bear from the standpoint that you're not going anywhere. And I can't say that. So as I say, it all depends on which side of the coin you want to have the conversation, right? Is it a plus? Is it a minus? Is it a good time? Is it a bad time? We'll only know all of that in history. But my real concern is surprises like these are certainly, as far as the market is concerned, it's not so much a surprise. It certainly invokes uncertainty. And my real concern is what does this do, or things like this do, to people's confidence, to their ability to make money, to earn a living, and ultimately to keep their account balances at a level that will help them sustain themselves when they're trying to make work optional.
Yeah. Well, I guess we're going to find out. One thing we do know is that U.S. Steel is investing $1 billion in its domestic steel plants in the U.S., largely due to these tariffs. Whether that's a good thing or not, should we be effectively subsidizing declining industries? It's open to debate. But the fact is that, tariffs are a legitimate exercise of sovereign authority. The Chinese are doing it. The Europeans are doing it. Everyone's doing it. Even though the U.S. system has lots of flaws and lots of barriers to entry, of all the world's markets, the U.S. market is the freest. Can we deny that?
Oh, I don't think so. I think we certainly champion that. We're proud of it, and probably we should encourage it. At the same time, like I say, if you're been around for 5,000 years and your people are behind you, I mean, no matter what, that's a different game plan than those of us who are in for 2 or 4 years. So, they believe they can withstand just about anything. And as I say, I think it really has a lot to do with where's the conversation about the things that we can agree on. I mean, if you and I were world leaders, Kerry, I wish we would come to the table with each other and ask the question, who makes the best possible product at the lowest possible price? So that's an open-ended question. I'm not telling you better do this, or I'm going to kick your butt and come in there and just crush you with my military. No, the question is who produces what at the best possible price? Because when you're the consumer, you may say you like American cars, and you may say you prefer to own them. And you'll say that in a poll, but when it comes to the time when you have to replace your 10-year-old car, and you're looking at 2 cars, and let's say mine's built in Detroit, right? And it's 20% higher than the other car that's built someplace else, pick a country, I don't care where. When you're the consumer, which one are you going to buy? If they appear to be the same quality, and my product is 20% higher than your product, you're going to vote with your pocketbook. You might say with your head and your mouth, oh, I believe in American. We should only buy American goods. But at the end of the day, you've got to be your own economist. And clearly, we've seen changes made because people perceive that I can get a better return on my dollar by buying this automobile from that country as opposed to this automobile from this country.
No argument there. Consumers are looking to get the highest quality goods at the lowest possible prices. And that's important for sure as a consumer. That's what we all want.
Well, then everybody wins, right?
Well, maybe and maybe not, but certainly.
Well, if I'm buying your cars, you're buying my shoes, and neither of us had access to each other's market, that would seem more like a win-win to me. But as I say, it's an open-ended question as opposed to, we're going to trade, all right? And let's recognize it's easy when we talk about, oh my goodness, they're taking such advantage of us. But as I say, let's be clear. Where did the textile industry start? I don't know. Was it New York? And then it went to where? South Carolina? And then it went to where? Alabama? Now, should I be mad because I had a job in the textile industry in New York and it's gone forever? So let's just recognize that it doesn't matter where the jobs were lost, right? Those people are going to feel that 100%. As I say, at the end of the day, the consumer is going to not care as much where it was made as they're trying to get the best out of every dollar that they spend to get as much mileage as they can, as cheaply as they possibly can. And that just makes a lot of sense.
Yeah. Hey, and I feel the same way. When I'm looking for goods, I'm not particularly obsessing about their point of origin. But on the other hand, there are these issues of basic equity and fairness. And hey, if the Chinese, if their markets were as open to U.S. exports as we are to their imports, maybe that would be okay. And then let the best product win, which is probably the way it should be. And
I agree.
And really, but it's not. So something's got to give here. We're seeing it now. What's your gut feel? Are they going to arrive at an agreement?
Well, let's just recognize when did this start? A year ago, April, right? Mm-hmm. And at every turn, we'd wake up and we'd buy the noise. We buy the good signs, the happy talk. Last 2 Fridays, we've seen our U.S. economic advisor, you probably know him too, Larry Kudlow, say, well, we're making some progress. We all go, oh, great, we're making some progress. But that's the point. We're buying what we want to hear as opposed to looking for the evidence that there is a real agreement here. And I hope we get to a place where there's a real agreement. Certainly, we all look forward to that, those facts being showing up, but they may not, or it may take longer than we thought. I mean, you've got 2 leaders here who kind of look to me like 7-year-olds, right? I'm bigger than you are. I'm better than you are. You lied. Well, you cheated. Well, you backed up. Okay, how dare you? Well, how dare you? Well, here we go, pointing fingers. Very infantile. Where are the adults in the room? So we hope it'll turn out well. As I say, my concern is if it doesn't, or it takes longer, or we have to go through depression 2 before we wake up and recognize that we have more in common than we have, not alike. And let's figure out how we can all go along to get along. Yeah.
Well, obviously there were a lot of other factors going on for the last Great Depression. And of course, the tariff issue is part and parcel of it, important part, a little bit different back then than it is now, obviously. But one way or the other, it's going to work out. Hey, John, we want to find out more about you, connect with you on the web. Where's the best place to find you these days?
ybpoor.com. Those are 3 words all together. YBEEPOOR.com. All
right, ybpoor.com. Hey, there'll be a link to it in the show notes to this interview. Any questions, comments? Email me, KL@KerryLutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Whether you're listening to this on a podcast or watching it on YouTube, please subscribe, like, and share whatever the platform is. Really helps us a lot when you do that. Helps us get all these different ideas out to you so you're better informed and make, hopefully, better decisions. John, we'll talk to you again. Thanks.
Look forward to it, Kerry. You take it easy now. Bye-bye.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.